What's up, everybody? It's Dave, live from an Airbnb. I'm here in Florida today. We are down here for my daughter's therapy. If you've been following our story, our personal story a little bit, I have a daughter who has cerebral palsy, and she is getting some therapy, some specialized therapy down here in Florida. I'm from Ohio. If you're new to the channel, welcome to the cream. We are cash flow, real estate, and money. We are full-time real estate investors. Our flipping business brings in six figures plus every single month. We share the systems and strategies to do that. And then we also own and manage a portfolio valued over $50 million. We've been buying houses for a long time, everybody, and this is what we do. And I look like a house buyer today. I look a little scruffy, if you can notice here. I'm a little bit unshaven. We had a 16-hour long car drive to get down here. We chose to drive this time because we flew the last time here, everybody, and it was worse. I'm telling you, I would have much rather flown just because it's so much faster. But man, that was tough. We got babies who were throwing up on the airplane, throwing Cheerios 3 rows ahead of us. I'm like profusely apologizing to people on the plane. But nonetheless, we made it down here to Florida, and we are ramping up for our live stream, which is coming out Wednesday. So if you're new to the channel again, make sure you tune in every single Wednesday at 11 o'clock Eastern. We have high-level training. It's free, and we'd love to see you on that live stream. You can ask us questions. You can ask us questions about the topic we're presenting on, or really anything real estate related. We are experts in the field of off-market acquisition, raising private money. This is what we do. In fact, in this video, I want to talk to you guys about a deal we're closing this week. I will have more thorough analysis of that particular deal in upcoming videos. But then we put another one in contract over the weekend as well. And that's what this is all about. We are big on the buy and hold here, everybody. And if you're new to the channel, go back and watch previous videos. I'm talking about the same stuff all the time. You are going to get rich in real estate, not from flipping properties, but from buying and holding on to properties. That's where all the wealth is created in this real estate business. Flipping properties is still essential, right? We still flip properties every single month. We do a lot of wholesaling and a lot of novations, and it's a great way to generate cash and oxygen into your business that you could use for paying for a team, for your marketing. Those are the two biggest expenses that you will encounter if you're building this business. It's going to be your help, your team, as well as marketing, and that's to generate leads for off-market properties. Those cost money, right? So wholesaling and novations and flipping properties is a great way to get the cash in to pay for these things and still make a profit, keep food on the table. But the real wealth comes from buying and holding. And we're going to be talking about this Wednesday on where to buy and hold. And this is a very applicable video because a lot of our followers here, a lot of our subscribers, a lot of people who are watching our videos, they don't live in affordable areas. They maybe live in a place like California or Florida, like where I'm at right now. Home values just don't make sense for a buy and hold type of portfolio, simply because the values and the prices you're going to pay for these properties, they outweigh what you're going to collect in the rent. It's tough to make a profitable buy and hold portfolio strategy in high dollar markets. That's why we are the biggest in our portfolio. The biggest chunk of our portfolio, I should say, are in affordable markets. We're big in Ohio. But these numbers that we're going to be talking about in these affordable markets, there's plenty of them. The Midwest is a great place to do this, but not all of you live in these places. So if you're picking a geography and you're going to, want to start accumulating properties, you're going to want to tune in on Wednesday, 11 o'clock Eastern. And really what it comes down to, first and foremost, everybody, when you're first getting involved in this journey, you got to choose an asset class. Right? You got to choose what type of real estate are you going to be going after. Now, the vast majority of our portfolio is single family. And we like single family, especially, even right now, we're still buying single family. We own a lot of single family. And there's the most opportunity. There is the most amount of single family to market to, right? If we were just going after multifamily, there's a lot less fruit on the tree. right? We want to go where there's the most amount of opportunity, and clearly there's more single family houses than any other asset class. That's why that kind of gives the single family asset class a leg up. Next is it's the highest in demand. I mean, people want to live in single family properties. They just do, right? They're going to rent easier, and you're going to stick more. You're going to have more long-term tenants in a single family house than you ever will in apartments. People most of the time they want to get out of an apartment, right? Not everybody can afford a single family house, but I would argue that, and because I know for myself, I used to live in an apartment. I've been through the renting phases of my life too, right there with these people who are renting properties. I used to rent an apartment, and I would much rather have my own house, especially if I got a family. I got a family right outside this wall here, right outside the door here in front of me. If you got a family, you want a single family house. It's apartment living's tough. And you got neighbors. You're just a couple sheets of drywall away from your neighbors, and a single family house provides more space, more security. And that's why it's in high demand. There's a lot of opportunity, like I said. So you got to choose your asset class. We encourage in our business, and we teach a lot of building a portfolio of single family houses. I think it's a great way to go, everybody. So you're going to want to choose a geographical area where there's a lot of the asset class that you're targeting. In this conversation, we're talking about single families. You want to go after an area that has a bunch of single family, right? You're not going to target a geographical area that has very little single family to choose from, and mostly industrial or retail or something like that. So, I mean, it sounds like common sense, but common sense is not always common practice. You want to choose a geographical area that there is a lot of the asset class that you're targeting. And then the next thing that we're going to be diving deep into on Wednesday is you got to go kind of where you have a team. And if you don't have a team, then it's going to be tough to buy and hold, even if it's your local area. If you're buying in your own backyard, if you live in a great affordable market and you're looking to build this portfolio, you got to have a team. And especially if it's out of your backyard, if you live out of state and you're looking to acquire properties in a different location from where you live, I'm telling you guys, you're going to need a team. This real estate business is a team sport, especially the buy and hold business. And we're going to be getting into the details on what this team looks like on Wednesday, but we're just kind of narrowing down our geography. Where do we want to start buying rental properties? Number one, where your asset class of choice is very common, very prevalent. Number two is where you have a team, right? Number three is landlord-friendly states. Not every state is created equally as well when it comes to the landlord laws and tenant laws. And if you're accumulating investment properties, you want to be in a location that's more landlord-friendly. And all that means, everybody, is you want to be in a location where if somebody's not paying their bills, you could actually get them evicted. There are states out there where you just, it's tough. You might not get the person out for 8 months or 9 months, and that's going to crush your cash flow, because guess what? You don't get any break on. You still got to make payments throughout the duration. If you're trying to get somebody out of a property for not paying, you still got to make those payments. That's why you want to be in a geographical area where you are more easily able to evict people who are not paying. It's going to keep you profitable. So real quick, we will be getting into really the details on the type of team you're going to need in your real estate buy and hold business. We're going to get more into what these landlord-friendly states are. That'll be on Wednesday. And then I just want to share a couple deals with you. So we're picking one up here in Columbus, closing this week. And again, after we close, that's when we'll kind of get into the details here with you, show you pictures and everything else. We're buying it for $50K. Our rehab amount on this deal is going to be coming in at like 65. And this breaks one of the cardinal rules that I also warn you all about, is be very careful on properties where the rehab amount is higher than the purchase amount. You really want to be a pro if you're going after high rehab. This is a pretty big rehab that we're taking on, but it's a good deal that we're buying. We're buying it for 50, going to put 65 into it. And then where does that put us at? 115 as our all in generally. Well, we're borrowing 130 on this deal. So we're gonna pocket an assignment fee of 15K. We're getting paid upfront. So we actually teach our clients and students how to wholesale to yourself. So you make money up front, then we're gonna get this property rehabbed. So we're all in for 130, all in meaning purchase and rehab. And the property at the end of the day is worth like 165, 170. So we're going to look to refinance this thing out after it's fixed up and rented. Property's worth, let's call it 170. We owe 130. So once it's all fixed up and rented, we will be able to take that to a lender to come in and pay off our private lender that we used for the purchase and the construction. Now we have a permanent 30-year loan on it, and we just stick it in the portfolio. That's how this business works. But those are just the general numbers. Oh, by the way, this thing's got a rent Section 8 for like $18 or $18.50. It's a nice 2-car garage, 3-bedroom, 1 bath, in a pretty decent little solid area. Probate situation is how we got this deal, giving the seller everything that they want. And we're willing to take on this burden. Somebody else's trash is another person's treasure. It's how this works when you're going after off-market deals. So more details on that. We'll be closing that one this week. I'm excited to bring that particular deal to you. Make sure you tune in on Wednesday, 11 a.m. That is going to be June 12th, 2024. If you're watching this video prior to that, make sure you tune in. But tune in every single Wednesday on this channel. We go live and we get in depth on training and helping you become a better real estate investor, helping you scale your business, because that's what we're all about. So make sure you like the video. Make sure you subscribe if you're just as passionate about real estate investing as we are. We look forward to working with you. We will see you all Wednesday. But before that, I will see you tomorrow on the daily video. We'll see you all soon.